All right, guys, welcome back to the channel. Hope you guys are all having a splendid day today. All right, in today's video, I'm going to be showing the power of compound interest. All right, so let's go ahead and get started. All right, let's just say you were to save $1 a day, guys. All right, let's start simple, something simple, $1 a day. So that equates to about, see here, $30 a day, $360 a year. All right, give or take, it's counting $30 per month. However, there's 365 days in a year. So essentially, you're saving $365. So the results may sway a little bit. So basically, let's just say it's $360, all right, going off the methodology they're using here. All right, so let's go ahead and do a simple 5% interest rate, all right, guys? So if you start at 18, so the younger you start, the more advantages you'll have than somebody who starts at a later age, all right? So let's go ahead and get started. So let's say you start at age 18, and then you plan to retire to the age of 60, all right? So $1 a day at a 5% rate of return. You can find all kinds of things that can give you a 5% rate of return. There's all kinds of investments in real estate, private ventures. If you were to partner with somebody, create some type of limited partnership, go ahead and do your own real estate as well, or simply doing those lending programs as well, where you lend people money and then they have to pay you a fixed interest rate. So you can find a 5% rate of return almost anywhere, guys. You just have to look for it. Do your research, obviously, because all investments, like I said, involve risk. So let's just say with all these terms right here. So let's go $30 a month, $360 a year. All right. So by the time you start withdrawing the money, you'll have $51,000. All right. So that's with $1. All right. So let's go ahead and do $2. All right. Same rate of return. You'll have $102,000. Let's do $3 a day. All right. You'll have $154,000, guys. All right. Now let's bump it up. All right. So the track history of the stock market. All right, let's just say I love the stock market, obviously, in real estate. However, let's just go with the stock market. All right, something simple that you could buy, something like an ETF or a particular stock that you've researched, you like. Let's just say that stock or that ETF could get you a rate of return of about 9%. All right, 9% a year. All right, so you start at 18, saving $3 a day, $90 a month, $1,080 a year, 9% rate of return. $506,000, guys. Wow. Tell me you can't find $3 a day. Just stop buying that coffee or just work a little extra hour just by simply working, let's say, an extra hour a week of overtime at your job or anything like that. All right, run errands for people. All right, so I know people who run errands where they get about $100 a week just by running a few errands a week. All right, so let's bump it up a little bit more for those of you who have a little more money to invest. Let's say you have $5, guys. $5 a day, $150 a month. Nothing out of the ordinary. I mean, somebody could definitely do this. I will suggest you do this because look at this, guys. Look at this, $844,000, all right? I'm going to show you the math on this, all right? So let's say you did this you did the same calculations here, but you saved it in the bank instead of investing. All right, let me show you what you would have. All right, give me 1 second. All right, so same rate, same terms, same rates, everything's the same. The only thing that's going to change is going to be we're going to take out the compound interest. All right, so the annual rate of return. All right, so let's take that out. So $5 a day, $5 a day times 360 days, like he was counting. That's basically $1,800 a year times, what do we have out there? We say we started at 18 years of age to 60. All right, so essentially that's 42 years times 42. That means you have invested that you have saved $75,600. All right, guys, remember, this is just saving it in the bank for those 42 years. All right, which would you rather have, 75,600 or 844,000? All right, the answer is obvious, guys. You have to invest. All right, guys, that's the only way to get out of this rat race. Just wanted to show you guys a little numbers. One last one. All right, I recently told this to one of my cousins. I want to save at least $10. You can find $10, $300 a month. All right, throw into ETF, 401k, especially if you find an employer that matches your 401k, you're well off, because that's an instant 50% rate of return on your money. So if you find one that matches your contributions at least 50%, if they match 100, that's excellent. You're set. But if they do 50%, that means for all the contributions that you put in there, they'll match 50%. So that's an instant 50% rate of return on your money, plus whatever the stock market gives you, your 401k. All right, so you'll be well off. So let's just say $10 a day. That's $3,600 a year. All right, nothing that's not manageable at a rate of return of 9%. By the time you start withdrawing the money, hopefully you put this in a Roth IRA. If you put this in a Roth IRA, you'll never have to pay taxes when you start withdrawing money. But essentially, at this rate of return, you'll have $1.68 million. All right, I don't have to say any more, guys. Just go ahead and invest. Hopefully you found this content interesting. Just want to provide you guys little ideas of what you can do to be financially set. All right, I'll catch you on the next video.